All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. U.S. President Donald Trump played stock market again here today and, came out and completely changed the tone of the market from what it was looking to open at and, completely changed the identity of the stock market for the day. Right, for the day. And, we remain in a very kind of volatile environment. What we see today is not abnormal. It's not something, wild and crazy. When you go back and you look at pullbacks in the market, we don't have to go back very far, right? And let's just kind of go back a little bit. It doesn't, pullbacks are never smooth. Yep, they'll have a couple really rough days, and then they'll have this big up day, and then they'll be selling off, and they'll rally all the way back, and then they'll sell off a little, they'll gap down and rally back, and everyone thinks, oh, okay, everything's clear, and the next day it's down big, and how far are we going to go? And the next day it's up big, and the next day it just has a huge range. It's all over the place, right? And then finally, okay, we string a couple up days together, all clear, right? Nope. It's one of those things where the biggest rallies happen with bear market conditions. And we are seeing, a decent rally here this year, a decent rally here today. But it is not changing the overall conditions. In fact, it's kind of confirming the overall conditions more than changing the overall conditions here in the here in the market. So that's what we see kind of going on here today. Market up about 22 points. Decent rally, 22 points, but nothing too monumental there. Volumes have faded, since this morning. We had some pretty hefty volumes here this morning, but as the afternoon has carried on, we've seen volumes fade a little bit. They're nowhere back to kind of February, March, April volumes, but, they faded a little bit. They're not up to what they have been for the majority of May here so far. Okay. Market vibe here on the day, I believe, is a 3. Let me double check here and see what it's registered here today. I saw it post, so let me come in here and make sure that I am okay, -4. So today is a -4. Still trending on bearish, right? The trend of the market vibe is still bearish, as it's been, for the entirety of this pullback. And so it looks like, -3 tomorrow would signal neutral. Right, would put it back to a neutral phase, but for now it's at a -4. Looks like a -2 tomorrow would actually trigger a bullish reversal. So that's what if you're bullish, that's what you're looking for, and if you're bearish, you want to kind of see it not push into those areas. All right, we have 4 minutes till 2:30 Eastern. We'll make the challenge trade changes, but I'm going to go ahead and do it now. Nothing's going to change too much in that time period. I have on my other screen the algorithm. It'll spit out any signals if they come in. As it sits right now, there is a new entry signal on the board, and it's Chipotle Mexican Grill. Unfortunately, like Raytheon this morning, I'm not going to be able to trade it. So, it's a signal coming in, but, don't have cash to trade it. And if we go and we look at the current trades, Procter & Gamble and JD, and we look and we say, okay, well, Procter & Gamble, the current stock price is 106.74, right? We take profit at 108.38. We're not quite there, and the stop level is 104.21. And we're not there at all. So, we're off of those two, but we do hit the auto exit date, right? We do hit the auto exit date. Now, the R up here is for red. If our option is in the red by this video, then I take the trade off, right? If the option is in the green, 5/17 is the exit date. Okay, and so let's go and take a look at where the option is here for Procter and Gamble, and it looks like the option, the mark is 315. So 315 here on Procter and Gamble. So that means we're running with a gain. It's in the green. All right. So nothing to do with it, and we'll take it off. Now, if tomorrow morning, let's just say Procter and Gamble, worst case scenario, it's down $3 on the open, I'll have to take it off because my option will be in the red. So anytime I jump on video and the option is in the red, I will have to take it off. Now, I know that'll prompt questions. Well, why not take it? Why not just take the gain and go? Well, because we're looking to ride the trend, right? We're just talking kind of worst case scenario, but ultimately we're looking to ride the trend. An emerging trend here. And yeah, the option hasn't, kicked up a ton in value, but we have a stock that's holding up pretty darn well in what has been quite a volatile market. And, would be nice to see it kind of punch up to 108.38, be able to take a little bit of it off and ride the rest. But we'll see how it plays out here in the next couple days. All right, that takes us to JD, which we don't have to exit. It's not at our profit target and it's not at our exit point, but the option value here is 247. So let me just update that trade price here, 247. So we're sitting in the green on it. But current stock price 30.67. We're not at our profit level. We're not at our exit level. So going to continue to hold and run here with it. Okay, decent start for the challenge for the first two trades. Both slightly in the green. We're not talking about massive gains here or anything. Just yet. But we do have two stocks that still have a good odds or have good odds of pushing solidly higher and emerging with those upward trends. Yesterday when I made the JD trade, it gave me two call positions for the challenge. And one of you commented to me, he said, "Well, Jeff, are you bullish on the market?" And I said, "Not necessarily." "Well, why are we in two call trades?" Which makes a lot of sense. I get it. And, over the years, as I've been in positions, I know my positions, other things get read into them, right? If I go in and make a trade, I can go and make an individual trade on Micron and, all of a sudden someone's going to read, a whole bunch of things that have nothing to do with the trade, from that. And they'll say, well, Jeff got into Micron, so he's bullish on semiconductors. So, that means AMD is going to do this. So I'm going to go buy AMD up to here and, taking it, out too far. The bottom line is when it comes to the challenge, and you've heard me stress this before, when it comes to the automated challenge, right? These are signals, these are triggers, and this is a recipe for executing them. This isn't any opinion. This isn't, well, Jeff changed his mind here or there, or Jeff thinks this or that, or this analyst thinks this or that, or this headline writer thinks this or that. Has nothing to do with any of it. Right? It is stripping out the noise, the human noise elements that are in here and playing the odds, putting the odds in the favor of the challenge and playing those odds, not the opinions, not the emotions, not the, just random thoughts of somebody. And so it's something where, where as we go forward, I understand, each one of you that are listening to my voice, you're trading your other stuff and things like that. Please do not look at challenge trades and infer something from them or make decisions on other trades because of a challenge trade. This is just about putting the odds in the favor. This isn't about, what some analyst thinks or, some headline that, JD may lose a subscriber or two and they may lose sales in Singapore for X, all that kind of stuff. It's just fluff. It's just noise. Even analyst upgrades upgrades, downgrades. Yes, they'll affect the stock. Great. But when you look back on any chart, right, what's the beauty of technical analysis? You look back on the chart here. Do you have TV? Do you have CNBC, Bloomberg, Fox, and all the opinions all day, every day in this chart? Do you have all the gaps in the market? Do you have S&P futures that are moving all night? Do you have all the news and all the headlines in here? Do you have all the different analyst opinions in here? Yeah, you do. It's all in here. But are you inundated with it in a well, I wonder type of a format? No. And so when it comes to price action and pure kind of technical analysis or pure, kind of algorithmic trading, it makes an assumption. And we can argue the assumption one way or the other, right? They're good arguments both ways, but it makes this assumption. It assumes that everything that the market knows at this instance is priced into the stock. That's the assumption. And, each day there's a little bit more to know. There's a little bit less to know. And from here and there, some questions are answered. Some questions are created. But bottom line is, when it comes to these trade algorithms for the challenge, they're looking at the odds. They're looking at the odds. And that's it. They're not looking at, well, you know what, this analyst said this, or this headline writer said that, or any of that type of stuff. So please don't read any of kind of my opinion. They're into it. Okay. That said, I'm still running with the trade live, right? Cash, live. It's not something where, where I'm just kind of watching and observing, right? Let's go to Raytheon. And I want to show Raytheon because of a couple things. And one, it created a bearish trigger here this morning, right? It created a bearish trigger this morning. And something is likely to happen here with Raytheon. And if it happens, right, we're going to go buy calls for the challenge, right? Raytheon triggered bearish here today for the challenge. Now, my opinion on morning entries versus afternoon entries. I'm a much bigger fan of afternoon entries and than morning entries, but that's a personal preference that isn't in the algorithm, isn't in the challenge. Now, there is a higher kind of burden of proof for the algorithm in the morning, right? It's a tighter trigger parameter than in the afternoon. But, here's Raytheon, and it's rallied, all the way back here today, and ultimately it could zoom on down and, trade down into the 160s. But it could also do something else, and we saw this happen with Home Depot. Home Depot, right here, triggered bearish on the trade algorithm. Triggered bearish, going on down. 3 days later, it whipsawed that bearish trigger and turned it bullish. Now, did I react to it? No, I didn't. Personally, I didn't react to it. I talked about it at the time, but personally, I didn't react to it. That's one of the human sides of it, right? But it's one of those where, boom, here we have the bullish signal come in, and great follow through. And we'll see this happen with challenge triggers quite often. Well, quite often is not the right word, from time to time, where a bearish signal whipsaws into a bullish, or a bullish whipsaws into a bearish. And it comes down to the fact that bull and bear traps are all over the market, right? We can have a stock, and I even mentioned with Raytheon the other day that, we have a stock here that is signaling that it's ready to trend, that it's ready to go on a big trend and waiting for some direction. I made the comment that I wouldn't be surprised to see it break out and then drop, or break down and then pop. If you go look, we see that happen all the time, off of consolidations, where you get this kind of false break and then rip, or false rip and then break. And there's no way to kind of pull that completely out or to say, well, that can't happen. That's one of the risks of the algorithm. It's one of the risks of any type of breakout or trend style type of trading. And, it is one where we could easily see it go from a bear signal today, trade up over 180 tomorrow and trigger a bull signal suggesting a move into the 190 to even 200 area. And if that's the case, there's nothing about this bear signal that would stop any type of a trade there. Right? It'll just come down to whether the cash is there. If the cash is there, then we'll go. And if it's not, then then I will not. I will not. You will not see me look at these positions and look at these signals and go, well, I like that one, so I'm going to trade that one. Or I don't like that one, so I'm not going to trade that one. There's no room in that for the algorithmic challenge, and there's a very good reason for that, right? And being able to take that out is a big positive, for things, overall. I will admit, the JD signal from yesterday. It's something that if it came down to me making the decision, I would have been very apprehensive. Very apprehensive in making the trade, right? Why? Well, do I want more exposure, knowing what's going on in the market? Alibaba earnings are upcoming. We have all these question marks, right? But, the algorithm doesn't take that into account. It looks and says, look, this is the setup. We've had these setups many times before. The odds are really good that there's an upward move, an upward follow through to this. So let's go for it. And here's our risk, right? And it puts that in and says occasionally the odds aren't going to work out. So here's our risk. Here's the stop area, and go. All right. So just wanted to kind of speak to that here, with the challenge. Now, another question that came in, and it came in on Monday. I promised I would speak to it, but it has to do with reentries. And, some of these signals that we're going to see, right? JD, well, let's just say for kicks and giggles, JD goes to 32 and you know what, we end up exiting a portion of the position, and then it reaches the second target, and we end up, essentially being out of JD. And, it keeps on going, and it kind of consolidates before going without giving any fresh, brand new trigger like what it gave yesterday. Is there something in the algorithm to say, well, you know what, there's a reentry point. Here's a nice reentry point along a trend. And the simple answer is no, there's not. There's none of that in this challenge and this challenge algorithm. The more complex answer is I've been working on it. I've been working on it, on kind of getting it to where, okay, do these signals, do they have some reentry points? But the reality is I found nothing consistent. Nothing consistent from a, pure algorithmic, perspective, right? Without adding any opinion into it, but just a rigorous kind of mathematical, statistical approach to where, there's any kind of consistency in any sort of reentry. The data on anything from a reentry that I get is very similar data to just picking any stock at any time and saying, okay, let's go buy it, and let's apply the challenge exit parameters, right? So, here are the challenge exit parameters, right? This ATR method, let's just go pick a stock, and then we'll apply this ATR method to it, right? I get the same data on reentry as I do with just picking stocks at random, and so there's not a discrepancy that says, or a differential in the data that suggests and says, hey, you know what, go and use this. It's the same as just kind of the dartboard, which, let's face it, a lot of algorithms, that's what they are. They're the same as dartboards. They're these fancy concoctions of rules and strategies, but they don't outperform a dartboard. And if you can't outperform a dartboard, what's the point? And that is that's an important part here. So I'm working on it. I have a few other things I want to try and play with. But the problem with dealing with reentries, right? When you deal with entry signals, the market environment, you can kind of leave that out, right? And say market environment doesn't matter. You know what? We can kind of hone in an entry signal that's going to work in volatile markets, that's going to work in trending markets and sideways markets, and that's what we've done. But when it comes to re-entry signals, what I'm finding is that different market conditions set up for different styles of re-entries. And, is there a way to kind of coordinate that with the market vibe? Is there a way to coordinate that with, even just a pure market performance metric? Been working on it, but haven't found anything here just yet. And, eventually something will emerge and, hopefully, maybe. But it's not something that is absolutely necessary to run a challenge successfully and to trade a challenge successfully, right? All it would do is create more triggers, right? All it would create is more entry triggers for the basket of stocks. So what I would have to do is, instead of having a watch list of 60 stocks where I'm just looking for initial trend entry signals, I'd have to cut this down to 30, and now we're looking for entry signals and re-entry signals, right? Because, great, I can have the algorithm, I can have it spitting out, but if it's spitting out, 8 signals a day, it doesn't help. Right? It doesn't help. It actually makes the challenge worse. It makes it harder. And so, having that kind of 3 to 4 entries a week on average, or 4 to 6 on average, that's kind of the sweet spot. Anyway, that's my thoughts there on that, and kind of how those, my thoughts on re-entries here with it. Okay. Now, one last stock I want to show, and that's EOG. EOG Resources. I talked about this morning. It was a possible bearish trigger if it sold off about $1 further from where it had opened this morning. Obviously, it's rallied, so it's not creating any sort of bearish trigger here. But is one that could emerge into a bear trigger pretty easily, but isn't quite there yet. And as we see stocks bounce, from the Apples of the world to the IBMs and things like that, right? It's one of those where we didn't get fresh new entry, downward entry signals on the big gap down on Monday, right? Why? That's not indicative of brand new trend. That's indicative of something oversold that snaps on back. But if we see a little more snapback and then start to roll over, there would be a lot of bearish signals that would likely come on into play into the watch list. But for now, it's it's been bullish signals. Raytheon on the bear side there. Chipotle has a bull signal here today. I can't go and trade it for the challenge because I don't have the cash here for it. This is also one of those stocks in the challenge that I added and made the comment that even if I do have the cash, initially, it's going to be a tough one to trade until the challenge has some substantial gains because of the cost of the options. And if we go and we look at Chipotle options here, right? CMG options, just come out to the June options. I mean, just for one contract, it's $2,000, right? So if I go in the money, it's $2,200. Well, the challenge isn't to the point where it can take on a $2,200 position. So, it's a fresh signal, but even if I had the cash available in the challenge, the allocation would be too high. So, it'll be one, the signals, when they come in, they'll go in. But until the challenge is up around, 6,000, somewhere in that area, Chipotle's not going to be very tradable, right away. And I added a few of these into it that weren't in the challenge test that we did earlier in April. But knowing that, hey, if they trigger early here, I'm not going to have a chance to trade them. An Amazon, for example. Who else here? Amazon, Chipotle, And let's see here. Maybe Alibaba could be in that range a little bit. So there's not many, right? There's not many, but there are a few that the stock price just simply too high, to trade here just yet. Now, yeah, hopefully here soon, that's not a issue or anything or a big deal at all. Okay. Alrighty. Thanks for hopping on. Have yourselves a fantastic evening. I'll be back on with you an hour after the market opens here tomorrow. We will resume with the Indicators in May series tomorrow. Looking forward to doing that. I haven't decided which indicator I want to talk about. I have 4 of them prepared to talk about, but I want to match it with what's kind of happening in the market and some things that are actually triggering and doing things in the market with them. So I'm not quite sure which one I'll show. Maybe it'll be the and I know I never say this correctly, but the Ishimoku clouds. Maybe we'll go look at those here tomorrow, and because we could get some very interesting action with some stocks on those. So might go take a look at that, and but we'll decide here tomorrow. We'll do that kind of midday tomorrow and talk about 2 different indicators at that time. Again, thanks for hopping on. Thanks for being with us here at Trader Minute, and have yourselves a fantastic evening. Talk to you tomorrow.